Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 23rd of January, 2019 at 3:25 p.m. Central Standard Time. You can see the energy market's down a little bit. We're going to get the API numbers in a few minutes from now, but very important too, the market's looking ahead and saying, you know, there's an attempt at a coup going on right now. You'll read about it in the news tonight or see it on your news as a new government is trying to form to throw out Mr. Maduro. He, of course, Mr. Maduro, President Maduro, has thrown out Americans. He's given them 72 hours to get out of the country. But other countries, be it Canada, we're getting some South American countries, Brazil, they're joining in and they're recognizing this attempt at a new government and they're recognizing the new government. So if you think that's interference, it probably is. The question is what happens and do they ever bring their oil back online? I think you get that. Stock market's still looking pretty good, except for the Russell 2000, which slipped back. Gold market down a bit, is silver up, but I call it mostly a day of just drifting in the markets and the metals. You can see that the market from its high close of 1289.60 has stepped back just a little bit. We're not down that much in the 1280.70 level. When I put on the daily bar chart, remember, we had if you will, a pennant formation here that broke out to the downside or an attempt at a downside breakout. I can still leave the resistance, though, line in. I can't leave the support line as that was broken. I can still argue that gold has a pattern of lower highs, lower lows, so it's still in terms of the swing line bearish until the market takes out this 1295.40 level. The market probably, if it can rally further, will encounter some form of resistance at the 18-day average of closes. Notice that the break didn't carry very far away from that line, and when I put up the swing line, you can see why. Remember, what a swing line does, and this is the top line, this is the bottom. Did I say swing line? I'm talking Bollinger Band. I used the wrong term here. Swing line's down, but the Bollinger Band. Think of this as theoretical resistance, theoretical support. So what's been happening in gold is, yes, it broke down, but volatility's coming out of the market. As the volatility comes out, the algorithm starts narrowing in. You can see how yesterday it made a run at the lower band. Today it got through the lower band of 1278.40 by 70 cents and then bounced back up. This does not mean that the market isn't in a bearish trend. It is, unless you close over the 18-day average and or take out the upper swing line. The problem is to take that out, you run right into the top Bollinger Band. A difficult chart. As this is all going on, the market momentum is staying down. So you're not in oversold territory, you're in a downtrend, the bias is down, resistance coming in 1287. In GLD, the popular gold ETF, you had today an outside day to the downside. Now, when I see outside days, be it upside or downside, it simply means you took out the previous day's high and low. A down day means you close lower on the day than the previous day's close. If you take that out, it's often a trap and the market goes to the nearest moving average. At least that's my theory. It's not fact. It's my theory, and I certainly apply it. Well, that number's right here at 121.63. What's the trend? Temporarily, lower highs, lower lows. Goal, if the market follows through, 120.64, the lower Bollinger Band. Like the futures, the Bollinger Bands are narrowing in. They're not widening out. They're not in a trend play one way or the other. GDX had gotten down the past 2 days, actually 3 days, to the lower Bollinger Band, bounced away from it today. Still oversold, in a downtrend, but it's hit its target. So this is a market that can either drift on you or surprise you if it takes out 2078 and get back to that 18-day average and neutralize itself. But I think it hit a downside target. The gold-silver ratio, as I've pointed out, had moved from about 81, 81 and a quarter up to about 83 and a half, and now it's backing off a little, which means silver is gaining a shade on the gold. And you can see how silver went down to its Bollinger Band, like the gold, holding it very oversold. Doesn't mean it can't go lower, but resistance more likely if it tries to rally at the 1560 level, the 18-day average of closes. The copper market went from the upper band in 2 days and just sitting here on the 18-day average. It's just waiting for something. Now, that something could be a trade deal. That something could be Chinese stimulus. I don't know what it's going to be, but you're not trending. You've got a lower and low, higher high. This is just a market that is a whipsaw market. Maybe it's good for day trades. It's certainly not a position trade. The platinum continues in its bearish trade, but it is very oversold. It does not have to go all the way down to complete its downside to a lower Bollinger Band. It got pretty close to it. Bearish market, wouldn't be surprised if the pros are gradually on breaks going to lift some of the shorts. While we had a small rally in palladium today, the fact that you lost the embedded reading often leads to price in the 18-day average coming together. I'd be wrong in that theory if the market takes out the most recent high. Other than that, I have every reason to believe, from my studies at least, that price and the 18-day average are going to try to work to each other. In the dollar index, you still have a pattern of higher lows, higher highs, but the dollar was down today. It is into an area that is overbought with the 72 reading in the slow stochastic. I consider anything over 70 overbought. Question. A lot of people are asking themselves, what happens if the U.S. and China go forward? Answer might be that emerging countries do better than America. That is why so many traders, longer-term traders, are talking up the idea of being short the dollar this year. Is that a short chart? No. This is a chart that's still overall in an uptrend, support back between the 18-day average and the 100-day. Even if you took out the last break low, you don't turn into a bear pattern and you are overbought. So you put it all together, you try to come up with a plan, and that's what we do here at the Linn Group. We write on all these different categories. We write for the commodity and the options on commodity markets. Be you a hedger, a user, a speculator, doesn't matter. Our letter covers the different positions and talks the language of commodities to you with trade ideas. Now, if you haven't seen our information, January 23rd, you owe it to yourself to do so. Get a free trial. Either give us a call, you can go to our website, you'll see our carousel of free offers, just click on it, or you can click right up here and you'll get there. I'm Ira Epstein. You have a good day.